What's the word, people? Hope all is well out there. I'm just getting some things together. Trying to be as quick as I can for you. Please bear with me. I am here though. With that being said, let me go ahead and activate these lives for everybody else out there. Please bear with me. I am here though. With that being said, let me go ahead. All right. We are live everywhere. Thank y'all for tuning in tonight. We are here, Facebook, YouTube, Instagram, Trovo, Kick, Twitch. Trying to see if I'm missing anything out there right now. I don't think so. Let me just go ahead. Yeah, YouTube, Facebook, Instagram, Twitch, Kick, Trovo. Yeah, we everywhere besides TikTok at the moment. Hope everybody had a great day. Hope everything was well out there. Y'all had a nice, safe little morning and evening. Try to make this recap a little quick, sweet, straight to the point. We ain't going to do too much tonight. I know everybody got some stuff going on out there, so let's get into it. So, let me stop the music in the background for you guys. I try to keep something playing just to keep, people that's out there waiting, just keep y'all entertained a little bit. But for the most part, I did 2 trades today on this one company for sale awaits. This Allerity Therapeutics, whatever, ALLR. They had some news. As I always tell you guys what I look for when I'm opening a trade. News is number one. Needs some type of catalyst out there to show the move, why the move is important. As well, we need some type of low float. So the outstanding shares for that company needs to be at less than 20 million, 30 million, you can say. This company had an outstanding share float size of 11.17 million. They had about an additional 50 million to dilute, but that's one of those situations. If a company decides to offer more shares, that's one of those moments of, if they have seen a spike in price and then all of a sudden they're like, all right, you know what, we can take advantage of this and bring the price back down, make the price a little bit more attractive, then they'll go ahead and offer more shares, and that will ultimately affect us price wise, but we don't worry about that too much. As well as with the outstanding share size, we need to have volume. So this company sold 387 million shares today. So do the math. Let's see, 387 divided by 11. Maybe 35, 36 times the company was bought, essentially. So that's just how many shares were bought in totality. Outside of the news and outside of the actual outstanding shares of the company, the float size, and as well as the actual volume for the company, what we want to do is make sure that we have something that shows some potential of attempting to break pre-market highs. Pre-market highs, I tell you guys every day, this orange section here is pre-market. So anywhere between 3 or 4 a.m. to about 8:29 Central Standard Time is considered pre-market. 8:30 to 3 o'clock Central Standard Time, because I'm here in Chicago in the Midwest, is the open market. That's where you see the white in the on the screen. And outside of that, let's jump into it. So I'm going to show the two trades. Both trades were made on this company. So what their news was, they had this FDA fast track approval for this therapy that they're doing for some type of cancer. I don't remember the exact cancer. Let's see what the cancer was. Ovarian cancer. So gained fast track status from the FDA for its ovarian cancer drug. At the time, this was the leading gapper, the leading gainer for the day. At one point, they touched about 100, maybe 30, 140% in the price range of overnight price spikes. So let's jump right into the trades, and then I'll do some explanations of them. And I took the first trade during the pre-market as well, just to capitalize on the momentum that we were seeing first thing in the morning. So this is about 746, 747. About 200 shares here, as you can see. $1.84 per share. Price is bouncing. I had an uptrend that I drew. MACD is green. We got the RSI brought back from being overbought. So with that being said, we were also watching them attempt to push the price back up to being overbought again. This right here was the high of the pre-market at that point in time. So we wanted to look at that as being resistance for this trade. Purchasing another, getting ready to sell off 300 shares at this point in time. Because with that being the resistance level, we weren't really too confident that it would break through at this point, because we see the MACD breaking down on the back end. So let's jump into that. 745, about here. So this little push, let's put this at a 1 minute. So here around this part, that's what we were seeing. So as I drew this uptrend, we got in around here once we saw price attempting to sit up on this uptrend level, and literally never really touched it, but got close enough after we saw this little chart pattern. See like this little bull flag, you can almost say, in a sense, just from this little, you could say ascending wedge or whatever you want to call it. But this little chart pattern, I tell you guys all the time, a chart pattern is just a moment of indecision. Price basically trades in a range, up and down, up and down, up and down, until it either breaks up or it goes down. At this point, when it got close enough, price was like 184, then it broke up. When it broke up to this resistance level, this is where we sold this. And that's basically what this first trade was. It was just taking advantage of this little momentum. I don't like to trade pre-market because I can't sell at market prices. You have to actually set a limit price to buy and sell. When we trade, we like to basically press a button, get in and out immediately. We don't want price to actually be the determining factor of when we get in and out. We want to get out at a level. I don't want to set a price of 195 and wait for that 195 to get touched. I want to just actually hit close, sell, get me out immediately. You know, I'm not trying to get a specific price. So this is why we really don't function well or properly during pre-market and after-market hours, or after hours in those markets, just basically because of that. But I was correct at that point in time to use the resistance, which was the previous high, as being my exit point, because once we hit there again, we ended up trading sideways again. At any point in time, this could have pulled back, but it traded forward and then ended up trying to break through, which it actually did, and then traded sideways throughout some time. This is where I got in again after the market opened, once we broke out of this new pre-market high. So let's show that trade, because these are two continuing trades, because we got a pre-market order in, took profit, and immediately once the market opened at 8:30, we then watched, because this was still a leading gapper, and as well, this was the most significant news that was out there today. There wasn't really any real competition in terms of news that was as important as this FDA fast track on this ovarian cancer therapy. And a fast track is just basically the FDA just green lighting a company to jump straight into whatever stage, whether it be stage 2 or stage 3 in their trial runs, to just basically go ahead. We see so much good positive information behind what you guys are putting out that it's okay for you to go ahead. We're not going to basically go through all of the rigorous steps and things to basically make sure that you guys meet requirements. We're just going to fast track it. You guys go ahead, jump straight into it. It's important. We see the importance of it. We see the value in it. And with that being said, with a drug or a therapy, whatever it would be, this in this case is a drug, but if it's a drug or some type of therapy or treatment, if it's that important and they find that type of positive type of interest in what it is that this company's putting out, then long term, that's a great company as well to pay attention to in the future. Whether you get a few stocks or a few shares in it and hold it for the long run, or you watch it over time and wait for them to report some more results going forward in the upcoming months, or maybe year, however long it takes for them to come up with a new report on whatever type of progress they've made with that drug. So with that being said, this is one company that I would pay attention to and come back to in the next 3 to 6 to 9 months. Even look on their site and see exactly what their expectations are in terms of the scheduling of when they plan on releasing new reports on these drug therapies and stuff like that. Let's see. So this again is ALLR. This is literally at 8:30. So the market just opened. So as soon as we sing this green candlestick or this histogram bar on the volume, 3.24 million shares bought at 8:30, we jumped in, and we were just literally just playing it just based off of that volume. Underneath here, you see the MACD is still red, but it's going pink, so that was good. indication that it had some interest in attempting to go green. We can see up here, this is the pre-market high up, or no, not the pre-market high, but this right here was the market structure. So this level I set because previously, historically, 222 was a resistance level. Let's see back in what, let's look at that now. 222. So let's see what time frame that occurred. So here, what, September 19th, 2024. This was previous support, which is future resistance. So since September of last year was around the last time that price touched that high. So that was really where we saw. We had already broke through these little resistance levels, these 164, so that wasn't worth putting on the chart anymore. We then had another one at about 273 or something like that up here. Yeah, so 222 and 273 at that point in time. So that's why we have those levels set when we look at the actual chart. So price popped up, it literally touched them, and then it pushed back down. But that's not indication that it will stay down there. It went up, touched that 222, 223, yeah, and sold off. So I'm actually giving a future foretell of what this trade actually did. So 100 shares, then I bought another 150 shares. So my average is about 206. MACD is still pink, still red and pink. It's about 8:38 or something like that, about 8 minutes into this trade currently. Now we made that run, popped up. At that point, I bought another 50 because I was trying to anticipate a breakthrough of that previous resistance level. Literally touched it and sold off of it. So we saw we were having a little trouble at that point. And then that's why I actually just closed the trade. Like, all right, we're closing it. So 217. So from 206 to 217, about 11 cents per share on the return on that move. But as you see that the actual resistance level was valid. Price touched it, bumped his head, fell off. That's why it's important that you set up your market structure before you actually hop into a trade, because you never know where price is actually sitting at that point when you hop in a trade. You could be above a previous resistance level, which price could eventually pull back down to find support at, or you could still be on your way to a future resistance level. But this just gives you a parameter to have a gauge of where price wants to go. You don't want to get into a trade and be blind. Only time it doesn't matter about a resistance level above a price level is when it's at an all-time high. When price breaks through every previous barrier, then you got blue skies. You don't know where price wants to go. These two trades were small trades, small position sizes. I took 350 shares here. The previous one I took 300 shares. So times $2 each, that's about $700 and about $600 on them, essentially. So $1,300 I spent on these two trades, only made about $60 on both. Well, with that being said, that's about 10% on one trade. So 5% on both. If you look at the $1,360, about 4.5% made on those returns. Compare that to the market, NASDAQ doing See what the NASDAQ did today. If I go to the Qs, 0.4. So it was a small day. If I put the IXIC up here, we can actually look at the NASDAQ. NASDAQ went up 94 points, so 0.4. So, well, we made 4.5% just on our trades. Every day, that's what you want to do. Can I outpace the stock market if I just bought the indices? Would it be better? Or on my own, can I outpace and outrun the stock market? Took light position sizes just because I was anticipating those breakouts, which they didn't occur. So when we saw those resistance levels, it wasn't worth trying to take a 6, 7, 800 share position size, because as you see here, it literally touched that resistance and then broke down. Then throughout the rest of the day, you can see the green MACD just go light green until it eventually sold off, and then it broke down. So now it's here at 135. I am actually holding about 850 of these shares that I purchased just for the value and what I see that the company could potentially have in the future. So 850 shares, hold them for a couple of months, if even a couple of weeks, if we see a pop and break back above this 220, 230 and try to take off. We could hit that 273. Above that 273, let's look at a future resistance level. As you see how this literally fell off. Fell off a cliff quick. So 487. So if we get that break of that 273, this could quickly run up to this 487. They could reclaim any of these areas as well. But that's here nor there. That's here nor there. All they need to do is report one or two more good signs, and from there it's up. It's going to potentially pop back up and try to run. So I'll hold about 850 shares, potentially 1,000, if not more. If we look here on the MACD as well, on the daily chart, the MACD just went green. So that's a good sign as well that eventually it could potentially build momentum to climb. Let's see on a weekly chart. On a weekly chart, they have been actually trading sideways. So that's just showing that this company is probably bottomed out. Now they finally spiked. So $2 to $4, I see in their future eventually. This is not investment advice at all, but this is a potential of, if they get some type of real traction, where the stock could go. The stock dropped from, let's see, shit. And these numbers as well are just crazy. I don't believe these were actual prices. This is just showing where the stock fell from in terms of once they actually entered the market. Because no stock is worth $600,000 unless it's the Halliburton. This shit says $1 million a share. Where the fuck are you getting these numbers from? $10 million, $20 million a share. What you was selling? One share? The fuck? Who is this, the owner? $14 million a share. Let me hold 850 shares and the shit go up to $14 million. Boy, that would be the greatest return of all time. Warren Buffett, who? I don't think Warren Buffett would be messing with me at that point. And when I said Halliburton, oh shit, you gotta, if we could get just one of those shares. Oh my God. Let's see. Not that one. Let's see. Where is it? Where is it? Let me see. Give me 1 second. He got some shit that's like $800,000 per share. And this man has like millions of them. This is where his real value comes in. The Berkshire Hathaway, not Halliburton. Berkshire Hathaway. Oh my God. This is what we want. If we can own one of these, we are balling. Not even that one. Is it this one? Yes. Look at this shit. A Class A share, $737 fucking $1,000 per share. And Warren Buffett owns, let me see what his amount is. This man owns 37.9%. Let's see. I need to see what the actual amount is because he has this public. And when I tell you this motherfucker owns like a million plus of these fuckers, this is where all his value is. Come on. Here we go. And this right here too, if you guys ever want to look at, you can see in general, like if you built a portfolio, you want to follow somebody, you can see what their holdings are with their 13F filings to see really where their wealth is. So Ally Financial, Amazon, Amex, Apple, the fucker owns the Atlanta Braves, like really. Bank of America, Capital One, Chevron, Coca-Cola, everything is important here. I'm just skipping over these companies though. Crafts, oh my God, Kroger, Mitsubishi, 200, what the fuck is that? A billion just in their market cap that they own of this. But that is nothing compared to what his ownership is in the Berkshire Hathaway. This is just a portion of the portfolio of the Berkshire Hathaway. But the shares that he owns of that, let's see. Let's look at the outstanding float. So they got 542,000 shares for $737,000 each. Today, only 263 of them was traded. So who the hell is buying a $760,000 share 263 times? That's crazy, right? This bitch went up $7,000 though. You're like, gosh damn. This is Warren Buffett's wealth here. I don't see this fall in no time. So let me look at a weekly chart what this is about to do. It's red, so it's pulling back and it might trade sideways. But previously it was up 800,000. That's crazy. Look at this. If we go back to 2020, this shit was 250,000 a share. Fast forward 5 years later, it's 750,000. So this shit went up 75% in 5 years. Gosh damn. Let's look at this. At what point was this shit affordable? 2009, the recession with the housing crisis, 76,000. Gosh damn. Even in 2000, it was still 44,000 a share. Let's see. 95, 94, 14,000 a share. 1995,000 a share. Like, bro, who keeps their stock price that high to keep you out? It was in 1982 you could buy for $464 a share. If you wanted to run with Warren Buffett, it's $300 a share back in 79. So from 1979, if you held this shit from $300 to 2025, you're sitting on 700 and some thousand per share. That's crazy. Some things can't be made up. And then it's crazy because there has never been like a stock split or reverse split or anything. They just letting this bitch run. Like, fuck that. You think you hit an all-time high here in 2007 at 140,000, 49,000 a share. Then it falls all the way down to 74,000 a year later. Then shit, 2014 to 27 a share. 2020 up to 338, 340, 350. And it just started going parabolic. That's crazy. That is crazy. And then CSX. This is the rail yard. Let's see, Berkshire Hathaway, BNSF Railway will not be it for CSX. Ending merger talks. That's great for me because that's what I feel. I feel those engines every day for CSX. I am a tanker. Let's see if I got anything here. So we can see here. I'm feeling literally CSX. So Warren Buffett could one day become my boss if they were to merge with BNSF. Thank God they didn't. Let's see. Let's start this over. I don't know what the recording did. So this was actually supposed to turn around, but for some reason the recording never did it. That's crazy. Okay, either way. Let me turn off the audio because if I play the audio, they're going to ban the video in certain countries. We don't need that at this point. So let me do a recap of both of these trades again. We'll end this shortly today. We're not going to keep this all night. So, FDA fast track approval for their drug on ovarian cancer. This stock attempted to break pre-market highs, but it did break pre-market highs. So once it broke pre-market highs during the opening of the trading, that's when we got back in for the second trade. This trade here, we were just literally basing it off of the uptrend that they were showing during the pre-market. Took what we could because we wanted to get repositioned as we saw the MACD starting to break down and go red and go bearish. Wanted to take our proceeds and get ready for the next trade. Next trade, we got in literally 8:30. As you see, the MACD is now red. So now we're getting prepared for it to go back green. And we're attempting to break this pre-market high. Well, we already broke it. This is the pre-market high right here, down here. So we broke it. We got in. And we rode it up to this resistance level. These are fundamental type of trades. Nothing complicated. Nothing fascinating about them. But that's how you want trading to be. You want to make trading fundamental simple. You don't want to make it too complicated. You don't want to try to figure something out, make a whole new type of style of trading that doesn't exist. You see as well that the volume is increasing. You see how it's spiking up. Look at that, the volume. You can't make that up. The volume is what lets you look at the stick, how it matches that one. They were attempting to break through this resistance level, but they couldn't. When we saw that, that's where we knew, okay, we need to go ahead and step to the side because the volume is trying to show us that it wants to go, but their resistance is real because the short sellers are stepping in. And as well, we're waiting to watch this MACD go green. And because the position was so small, it wasn't worth actually trying to see if it was going to break through. We were just going to take our proceeds and move around. take what we can, step to the side, and that's literally what we did. So let's see here one more time. As you look at this chart here, you got this little bull flag, literally. Then it broke down. They couldn't maintain it. MACD on the 15-minute chart ended up going bearish. And so maybe in a day or two, hopefully tomorrow, as this goes pink, it attempts to go back green, and we see a retest of these levels, and it takes off. So like I said, overnight I'm holding about 850 shares. If it breaks down, it breaks down. If it doesn't, it doesn't. Whatever. Or if it does, it does. But for the most part, we're trying to see or reclaim this EMA and attempt again to break through these previous highs from the previous day and start working its way up to these $2.73, $4 ranges in the near future. This is not investment advice. Don't take what I'm saying and say, I'm finna go buy 1,000 ALLR, 100 shares. He said he bought this, so I'm gonna. Don't do that. I'm just giving you my opinion. The time sensitive situation, so we don't know how long in the future it's going to take for this to play out. But it says cause 132% stock surge to a 10-month high of $2.19. So in 10 months, this is the first time this price has went this high, which is good information. As well, 387 million shares were bought. So that's letting you know attention is on the stock. We just hope that it's a multiple day continuation of the attention on the stock, and it doesn't just get buried under other news of other stocks hitting the market and then running. So those are my two trades. I don't want to keep you guys too much longer. I will be back tomorrow to report my trades. Consistency is key. Try to have a minimum of 2 to 3 trades a day, even if one. Use a cash account. People want to get in and they figure out, like, how can I make all these day trades? And the first account you are offered is a margin account. A margin account is an account where they give you a leverage on what your value is. It has to be a minimum of $2,000. So if you don't understand a leveraged account, basically they give you, at this point, it's like a 4-to-1 leverage. So if you put $2,000 in, you now can spend $8,000. Back in the day, it used to be 2-to-1. You put $2,000, you could only spend $4,000. But now they're giving you 4-to-1 leverage. They're making it crazy for you. And as well, what you spend in a day settles overnight, so you can actually spend it again tomorrow, or you can withdraw those funds overnight, which is awesome, especially if you have an account with a brokerage where they give you a debit card. But the way how these accounts are set up nowadays, you just transfer from the account straight to whatever brokerage your financial institution is. So whether that's Chase, Bank of America, Navy Federal, whoever you got, you can transfer your funds out of that account. You make $2,000 a day overnight, it settles, you can send it. The best brokerage I ever had was, I want to say, E-Trade, because probably by like midnight those funds would settle, and you could literally take those funds and move them out and do what you want with them overnight. I believe that was E-Trade, but that's another story. We ain't talking about E-Trade at all. But yeah, with the cash account, a cash account, you can spend whatever amount that you have in that account, and that allows you to make as many trades as you want. You just trade based off the value that you have in that account. If you go broke, hey, then that's great. You spent all the funds that you had in that account that day, but you've made as many trades as you wanted to as well. So you're not even really in the ballpark of, worrying about what you did, because shit, it's over at that point. That's the problem with having a margin account that traps people in these trades, because, and as well in cash accounts too, because emotionally people get to the point that they spent all their funds in there in their last trade, and their last trade goes against them, and then they're like, I don't want to sell. I don't want to sell because I can't get back in. And by not being able to get back in, it makes a person hold the position that they don't want to necessarily hold. Trust me, we've all been there. It's something that every trader relates to because it's like shit. It fucks up my P&L for the day. It fucks up my win to loss ratio. Is if you're to the point that you spent the last funds you had available in that account for the day, you shouldn't trade anymore. You need to stop before you even get to that point that you spent all the funds. Because if you got available funds in that account, if you made money for the day, hey, you might want to, splurge a little bit on yourself. You might want to treat yourself. I made $300 today, $100, $50, $20, whatever the case. I may want to take $10, $50, $60 out of it because I'm not missing it. I just made it. Let me go take this and do something else with it. Well, because I spent that in trades, now in my mind, I got to wait till tomorrow to remove those funds and pay myself. You want to get into the habit of believing you are a profitable trader where you can actually start paying yourself. That's the ultimate goal. Whether you turn your trading account into a IRA type of like retirement account or something, where all your trades are then put into like a tax deferred situation that you're not able to touch those funds till you're 65, but you could and take a penalty on it. But in your mind, you're like, if I'm going to use those funds, I'm going to let them build up in a tax type of deferred little system that ultimately those gains I'm not even going to worry about because it's tax sheltered at this point in time. For myself, that would be golden. Even if you were to like take an old IRA or an old retirement 401k or something and roll it over and trade it, because you can do that and grow those funds yourself, you want to build that retirement account for yourself. This is what we want to grow to in this platform where you guys have a regular trading account and a retirement account. And this retirement account, the theory is it should have more money available to trade than you have in your everyday account. Because in hindsight, you should have funds built up in that retirement account. That retirement account should be a saving vehicle. And as well, you want to be a little bit more risk averse for that account. So you're taking lighter position sizes. You're taking more risk averse trades where the risk to reward ratio is a little bit, skewed in the favor for the reward. You want to continue building and compounding interest in those accounts as well, in that retirement account. In your everyday account, that's just your vehicle for being able to live your lifestyle. This is really what we all want to grow to be able to do, where you can take X amount of dollars and pay off your bills for the month and still be able to grow that account and still see the growth in that account every month without taking from that account and then needing to rebuild what you lost out on. You want to be able to essentially make your monthly expenses in about 2 weeks. So if your expenses monthly wise, say your mortgage is about, this is for homeowners, even renters, because mortgage and rent is hand in hand at this point. Mortgage $1,100, $1,500, whatever the case. Rent $1,100, $1,200, $1,300, because a landlord is going to set your rent higher than the mortgage anyway. They're not going to give you rent lesser than the mortgage for the property. That's their point of actually having renters, because they want cash flow. So we put rent and mortgage in the same box. One may top one another just based on location and the home in itself, whether it's a single family home or it's a multi-unit. You may be able to get a slighter, lesser rent because there are multiple units in that building that will compound and be more than the mortgage for the landlord. In a single family home, you're definitely paying higher rent than the mortgage for the landlord. So hand in hand. But say we got $1,500, we'll just say there just for number's sake, $1,500 for rent and mortgage. Card note, if you're paying a card note, I have a Mercedes. We're not going to talk about my numbers. Let's see. Let's see, ballpark, because I don't want to get too realistic here. But we'll just say, I got a crazy number. But for everybody out there, we'll say 500. 500 rent. So 2,000 for the car note, including the rent mortgage. My mortgage as well is below 1,500 as well, so I'm not even at all concerned about that. But 1,500 for mortgage, 500 for car note, insurance on the car. Let's say 300. So you're at 2,300. Now you got utilities in the property, or whatever the case, wherever you live. We'll just ballpark that figure to 300 a month. So you're at 2,600 a month. You got life insurance you're paying for yourself and your family. Let's say about 200 a month, maybe 300. Mine is about 3-4 for the family, but we'll say 200 a month. So we're about 2,800. You got your food and stuff, your sustenance as we call it. Let's say that's about 500 a month. That's just like groceries, restaurant food, and stuff like that. So we're about what, 3,300 a month. We got all of our toiletries and just miscellaneous things. We'll throw another for the month, because that can get wild when you start saying miscellaneous stuff, because you got children, you got a wife, you got your personal stuff. You just start going Amazon crazy, like shit. Yeah, Amazon damn near know us by first name. But everybody else isn't the same. So we'll just say maybe 500 a month, just random shit. So we went from 3,300 to 3,800, just random shit now through in there. We ain't even talking about like entertainment and shit like that as well. We'll just make a small figure because we don't really go out that much out here in this case. But most of like your entertainment as well is going to be like in your groceries. You start buying shit just to, enjoy at home. Like for myself, like shit, I went through this bottle of tequila. This is gone. This bottle of tequila is about to be gone. Shit. My Heinekens, those are gone. You know what I'm saying? I buy cigars every day. Let's see. Cigars and everything. 200, I said. 200, 300 maybe. 300. We had like, what I said, we were at 30-something, 138 or something like that maybe. So we're like at 4,000. I'm just giving a picture of how 5,000 a month could go. Like literally, and it's crazy because then you start looking like, damn, 500 a month, 5,000 a month. And we ain't even talking about like bills in terms of like credited cards and other accounts that you got payments on every month and shit. We ain't even talking about those. We ain't even really threw that figure in yet. That's about another 1,500. Especially when you got 2 adults in the household. You got Amexes, you got Capital Ones, you got just whatever accounts you got. People got their flex pays out there they're paying on weekly and stuff like that. You got gas cards and shit. You look up, you're like, gosh damn, like that's about an extra 600 a month, 700 a month. Like, yeah, 5,000 a month, that's realistic. 5,000, you're like 60,000 a year out the window. How can you sustain trading to be able to live and pay for your lifestyle? Is what you really want to go to. And this is where I will help you guys build the model. This is really what I spend a lot of my time focusing on, because that's the retirement goal. To be able to do this every day on your own and use this as a vehicle to be able to provide for yourself and your family. For myself, shit, we got a tax bill. And I mean a tax bill, I mean like IRS taxes. I've been paying taxes for the last decade plus. They take like damn near 300 a month to pay taxes every fucking month. And it just gets compounded every year. They give a new tax bill. This is what you owe. This is what we're going to add to the tax bill. Okay, well, as long as y'all keep taking the same amount. And then last year, I got a letter in the mail that they increased my tax bill. As soon as I got a raise at work, I swear, that same month, I got a tax increase on my tax bill, which is crazy. I'm like, are you guys working hand in hand with my HR for this shit. But that's here nor there. So there's 220 trading days in a calendar year to trade on the stock market, figuratively, including holidays and weekends, taking those out. So out of 52 weeks, which is 365 days in a year, you got 2 weekends each week. So 52 times 2, that's 104 days. That's automatically removed. So Saturday and Sunday, automatically removed. So out of 365, you got 104 taken. So that's what did I say? 261. So then you got 261. Now remove federal holidays out of the picture. You got maybe 9 federal holidays or something like that. Those days are taken out. So we're down to like 252 or something like that. Then you got other days that go with those holidays that get taken out, removed. So such as like Black Friday, which won't be a trading day, I believe. Following right after Thanksgiving. But just averagely, just know the number. It's about 220 trading days in a calendar year to trade on the stock market. They got other days that they close the market for as well, but we're not even getting to the real number right now. I don't know. We'll pull that number out. It's 220 in the average. If you make $100 a day, just add the zeros. That's all you got to do. First, 100 a day, which has 2 zeros, and you got 220 days, which has 2 zeros, so 200 out of 200, but 220. Just add the 4 zeros and put the number in front of that. So with that being said, you're looking at 22,000. That 2 takes up that 4th zero, so you got 22000, but that 2 makes up that place for that 4th zero, so you got 22,000. Do the math off of that. 200 a day, you got 44,000. 300 a day, you got 66,000. 400 a day, you got 88,000. Just do the math. Essentially, so this is really what you want to work on. How can I make $100 a day, 200 a day, 300 a day? With that being said, what is your strategy to making $100 a day? If I take 1,000 shares and make $1 on it, that's $1,000 per share. I mean, profit off of 1,000 shares. But that's not realistic, because then the stocks that you'd be trading to make $1 a day, $1 per share, you're spending about $40,000, $50,000 on per share. I mean, in each trade, but you're not really doing that on a normal average consumer situation. So 1,000 shares times 10 cents. That's how you go to make that $100 a day. Because 10% or 10 cents out of 100 is 10. So that'd be $10. So 10 cents out of 1,000 would be $100. Now, what can you buy 1,000 shares in to get a 10-cent pop? And this is where you start looking at the cost of the shares that you want to purchase. If I can spend $2,000 on 1,000 shares to get a 10-cent pop, that's essentially what you start making your model on. If you go and you make a larger number, then just put that in your calculations. But this is how you build some type of strategy systematically to be able to provide for yourself and your family. Then with that number being said, then you can then figure out your risk. Risk is key. Risk is number one, because you don't want to be counterproductive to your growth and what you're trying to do. I want to build the account, not devalue the account. So when you see that trade isn't going in your favor, kill it. Get out of it. As I said earlier, traders get caught into this whole thing that because this is my last trade of the day, I don't want to get out of that trade. But then if you remember in your mind, I'm here to grow this account, not gamble on this account. If something goes against you, get out of it, because then you realize I can make that back tomorrow. If I cut my losses early, I can make those losses back way faster than attempting to rebuild everything that I lost the day before, because I lost a larger value than I anticipated or that I was comfortable with. You don't want to get into the market and make a position size that you are uncomfortable with. If the trade makes you emotional, get out of it. That's everything. When you're trading, no emotions are involved in this, because you're trading against computers and they don't care about your emotions. I have this thing that I tell people all the time. Emotions don't pay bills. It don't. If you become blind with tears and sadness and sorrow and greed and anger, you won't be able to pay anything, because none of that pays your bills. Every day you wake up, regardless if you're happy, mad, or sad, you still have to get up and get your ass to work. Still got to put your best foot forward and go out and put in some time on the clock. Your boss don't care how you feel. Shit, they damn near don't even want to pay you your sick leave, let alone your vacation. They don't care about that paid time off shit. For them, that's a bill. They're paying that. They coming out their pocket to pay you to be home. So remember that when you're trading, emotions don't care about what the fuck you doing. If you were correct in that trade, but it just didn't play out time-wise for you, if it doesn't have any real impactful news to really make that trade look as if it's going to be a profitable trade in your favor, just kill it. You probably just wasn't right in that time and in an assumption, because there are bigger fish out there in the sea that are holding a price point down because they may have options in that position, and they're making the price action go in their favor. You just weren't looking at it in their perspective. So, that being said, I'm bakerdeshun. I'm going to get off my soapbox. I'm going to let you guys go. I appreciate you guys for your time tonight. You can find me everywhere: Facebook, YouTube, Twitch, Kick, Trovo. I don't know what I'm missing right now. I said Facebook, YouTube, Instagram, Twitch, Trovo, TikTok. Yeah, you can find me everywhere. That's bakerdeshun. Title, I just released another song today. It's under review. So once they go ahead and approve it, it'll be up there. My homie Brian asked what platform am I trading on. I trade through Webull, but this is TradingView that I use to look at the charts. Let me reply to him. And this, as well as the downside of streaming on so many platforms, I miss different comments because I'm not getting all of my comments all in one specific location. So at times I'll have to go from here to there to there to here to see somebody make a comment, and I don't want you guys to be offended if I take time responding to you, but let me do that while I'm here before I let you go, just so that you can know that I did acknowledge your questions. Let me go through these different sites real fast before I let you guys go. And for those out there that did want to know as well, I used TradingView to show the charts that I show you guys every day. But I have my TradingView account set up with my Webull account to use my Webull. My brokerage is Webull. But because the charts are like the top tier charts and the algorithms and everything through TradingView, that's my go-to. I love trading through TradingView. I won't use any other platforms to trade. So that's that. But yeah, with that being said, that's the number one question I need to answer. Thank you. Trading is risky. This is not investment advice. You guys enjoy your nights, and I'll see you guys tomorrow. Hopefully, God willing.